this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market and how we can plan for the trade for the next day. So we had today is May 19th, 2022, Thursday, an expiry day, and the market crashed on an expiry day. Right, and back to the crucial support zones where it had attempted to climb back. Right, so let's get into and see what exactly happened. So this is the pre-market analysis for May 20th, Friday, 2022, tomorrow, and it's based on all these technical parameters that you're seeing, and also we'll have some data analysis and global cues and all that we'll look up, and we'll finally wrap up with the market view and then some actionables as well. So this is the Banknifty 50 and the Banknifty charts that you're seeing. So remember, we had a big bounce of 400 points, and then we had bull trap yesterday, and then now we have back to square one with a huge gap down. Right, how much did we lose? It's 430 points lost on Nifty and 800 points lost on the Banknifty, both with a huge gap down. Now we are very close to a previous swing low, and also we are back to a support zone. Right, we are at a very good support zone. This zone is a retest of the previous level and is very good support zone. Any breach of that is very crucial. For the Banknifty, it's also at a support zone, but the previous swing low support is 1000 points further down. But otherwise, so when it is at support zone, which was a persistence earlier, then it's a change in polarity chance of a bounce. Right, so there is an up move that is possible. Second, there is a consolidation that is possible because at 430 points lost, you're not going to further crash down further immediately. So there is a possibility that. Or there could be a possibility that you breach this swing low and make further goes bearish, breaking all the supports. So all these possibilities are there. You never know what markets react. All we have to do is mark your support and resistance levels at each places, and then take your positions, go long, short, and according to what the levels and what probable areas where you look for the market to consolidate or break or breach or whatever. So accordingly, you have to manage your risk is what you have to do. And news will be floating around. So this is the right time when you should never look at the news. So news happens after the charts reflect that. So the charts would reflect ahead of the news most of the time. So that's technical analysis. So what exactly we lost, right? 2.65 and 431 points on Nifty and 848 points, 2.48% lost in the Banknifty. All the gains of previous 2 days back again is all lost, and now it's a trend line channel for the down. Intraday, look at this. So it's an overview. This is all the moving averages that's showing, right? 200, 100, 50, 20, all are lost, and then we are sliding to a trend line channel on both the indices and retesting a previous swing low very close to that on the Nifty and somewhat close on the Banknifty also. So intraday, this is the price action. More than 1% of huge gap down, and then after that, it did not stop there, not consolidate, not try to recover. It further went 1% down and made 2.65 kind of down more. Same thing, Banknifty. You already had 1.5% lost, then further trending down throughout the day. That's exactly what happened intraday. For Japan's, what do they show? It's showing clear bearishness since many days, and we thought we are done with the bearishness and the band walk, but it has come back and seems like it may be falling back into the band and to do the band whacking. So bearishness clearly evident on the short-term Bollinger Bands charts. Support resistance levels is something that we got to see. So it has made a new gap down. New gap resistance is there. So that's 3 resistances on the upside, and same the Banknifty also 3 resistance on the upside. So resistance immediate would be 15,850, 15,950 levels. Fibonacci 61, that's a retracement level. So that may be a good resistance to clear. And then above that 16,100, 16,200, then 16,350, 16,450, which is Fibonacci 50 retracement level, and above that you have another gap 2 resistance 16,550, 16,650, then above that 16,700, 750, and 16,800, 16,900 range, that is Fibonacci 38 downside. If that bridges 15,850 is gone, then we have 15,500, 15,650, which is the previous swing low. Breach of that would take it to 15,350, 15,450, then back to 15,000 kind of level range. Banknifty's levels are not clear. I'm going to the charts and then having a look at that directly. Let me go to the Banknifty charts and see the levels. So what does that say? All right. So Banknifty also has got a gap resistance. So clearing 33,600 or 34,000 Fibonacci 61 retracement will be the first target. Above that is 34,350, 34,750. Then you have resistance number 2, 35,000, 35,300 Fibonacci 50 levels. Then you have 35,600, 35,900. Then above that 36,300, 36,800 Fibonacci 38. And then resistance of 35,500 Fibonacci 23 clearing only would say that we are done with the down. Similarly downside, a breach of the 34,000 would probably mean, or 33,600 would probably mean that we have an immediate support of 33,000, which is the previous swing low, not the previous immediate support zone. Previous swing low is further down 32,150 levels, right? So first 33,000 support, then 32,400 to 32,800 support, then 31,800 to 32,150 levels, right? And below that you go back to the 30,500 to 31,000 kind of levels. That's about resistance on downside. Let's get back to the charts. So momentum. Yesterday we talked about a range shift that could be potentially work out because the big climb from the bearish zone to the sideways zone had happened on both the indices, but it did not sustain there. If it had sustained there, it would have been a big bullish move of a bounce after that. Normally whenever the range shift happens, there is a big bounce up move that can happen, but that did not happen today. Instead it had turned and fallen downside, resisting below the RSI 40. That is clear bearishness. So basically Nifty and Banknifty both are in the bear zones on both time frames, right? So this range shift actually failed. This is yesterday, is not updated, so actually there is no range shift. Range shift failed today, and it has turned to clear bearishness with a resistance below the RSI momentum 40 hours, right? So that's trend is clearly bearish in both time frames. Weekly and daily charts are showing clear, but there was a bend here on the short term, which indicates that probably the bearishness strength of that is reduced a little bit, right? Never know, but as of now there is no change in the trend. Trend remains bearish on both time frames. We expect 10% today, just single day, and it's very close to 25 levels, 24.55. 25 and for the implied volatility of Nifty. Implied volatility percentile shows it's on the peak, 94.452 week high kind of levels, right? So so it is greater than 24 until it cools off below the 20 levels in downside. Otherwise, until then you have trouble. You have to be cautious. Good shoot your portion size is all you can do, and trade carefully, right? Open interest analysis is for the next monthly expiry. That's May 26, 2022. The actual trading may be happening from tomorrow, so today's an expiry. So this the data may not be that much relevant, but still, as per what it shows in the charts, the data is showing that it's 15,000, 17,000, 2,000 points is what the range for the highest put and call rating is. 16,000 and 16,000 is the same place where the highest put and call rating is seen. So 16,000 seems to be a major zone for the next this monthly expiry is what it looks like, right? Whether it remains below the 16,000 or will it manage to climb over 16,000 for the monthly expiry is the question. 0.71 is not bullish enough, right? And 32,000 and 36,000, look at the range. 4,000 point range is what the Banknifty highest put and call rating is seen, in 33,000 and 35,000 where the second level of put and call rating is seen. 0.67 is not bullish enough. Again, so short build up is what happened in the futures open interest, and what we saw earlier the range was on the monthly expiries options open interest net. So PCR feature overall it shows bearishness everywhere, right? It might be showing full red except ITC, the only single stock that performed today. All sectors across sectors red, nothing is done good. HDFC Twins all went bearish and slipped below the momentum below 40 and slipped below the resistance also. An attempt to climb back has not succeeded, and Lands managed to stay in the sideways zone, and the Infi big crackdown happened. A 5% downwards happened in the IT, and Infi could not stand. Even the big thing is that TCS, which is a stronghold and is maintaining that consolidation level for very long time. Today it has broken that and it slipped with a huge downmove that has happened. Momentum slipping to the sideways. So That's a big thing that has happened, right? The IT stocks, especially TCS, has gone mad. As crazy downfall happened after from a major support. There's a kind of surprise thing that happened, right? It was taking that place as even as a good support, and even attempted to move above that. It was a channel edge also, and it is broken. Now it's clear into bearishness. ICICI Bank managed to stay in the sideways on momentum, but although it was a gap down bearish day, it did not do such big falls. Kodak Bank managed to attempted to hold it above, but it is also showing a big gap down, giving away the resistance where it was trying to bounce up from. Right, once again it may be going back to the support zone below. So, but momentum is had climbed into the bullish zones, but slipped back to the sideways zone. That's where it is. So they are bearish evident everywhere. Strength is, if at all some strength is seen, it may be the sideways move that is happening in the lines, and ICICI Bank probably. Others are all struggling, struggling to maintain themselves in the sideways zone, and then almost got into the bearish zones kind of thing. Right. So that's none of the heavyweights have performed. Sectoral performance, if you see, it's a down day, obviously big down day. So look at this, 5.7%, near a 6% down single day. Already it had corrected heavily. Now on top of that, it has further crashed a lot. Right? So that's the IT sector, which was the bellwether. Like it was the sector that was holding the indices for long, and it was crazy bullish up over that. So the thing is that the USD INR current, the currency advantage, the dollar advantage that we're getting right now, even in spite of that is supposed to bring in green into the PNLs, but even that is not digested by the market for some reason, and it's turning bearish. Probably market assumes that it is overvalued, and the valuations are too high, and it has run up a lot. Is what it looks like, but because there is no reason for the IT to fall this much, Well, the only reason that is the US market is crashing. US market, all the IT stocks have corrected more than what is required. Right? Too much of correction has happened in all the Nasdaq. That may be the only reason that. So this may be an option to buy in for long-term investments at cheaper valuations. We could buy a lot of good stocks in the IT. This is an opportunity. Metal 4% down, auto 2.6% down, pharma 2% down, FMCG not much gone. The only sector because ITC was moving up. Reality 2.6%. So everywhere bearishness except for FMCG and auto, which is managing to be the sideways also in the short term. Otherwise, it's all bearish all the way. With extreme bearishness in IT and reality also, both the time frames have turned to bearish. Right. So even the metal has also cracked 4%. So it's a big fall. So across the sector, underperformance is what we saw today. Institutional participation data has not come in, but it was heavy selling yesterday as well. Even day for yesterday, when the market was moved up 400 points, also Fyers was selling 2,000 crores. Today, it might have been definitely more than 4,000 crores of selling, but yesterday, DAs did not buy much. That is the reason why market did a bull trap. If DAs had bought a little more, then market would have made a close above the previous day's high. That did not happen yesterday. So today, if DI is most likely to FIs definitely would have sold, but it all depends on how much DI is bought today. So there is also a chance that the DIs are sold today, right? Looking at the 430 kind of fall that has happened, DIs also might have sold today. So like, I have to see the data. The data is not coming. I'll just quickly go in and check whether it has come in for 90. Yes, it has come. See, look at this. DIs did a lot of buying. 3,000 crores of buying has happened in the crowd. But look at the kind of buying. This is nearly 4,900 crores of selling has happened for them. So it is once again the FIS who will spoil the show as usual, right? So that's the kind of institutional participation worry that we have. Currency extreme levels of 77 point, historic 17-year high kind of levels, but some slight cool off has happened today. But what cool off when the rupee is weakened to the core of 77.7 kind of levels, right? Dollar index currency, dollar index also has cooled off and then slipped slightly into the sideways zone from the bullish zones. So some consolidation may be happening in the dollar index side, but yeah, so that's the state of currency, and it's not that good for the economy. As I say every day, the currency has to cool off to 75 levels, at least 75 levels. Otherwise, as long as that does not happen, we are in trouble. And look at the global indices. This is the culprit. The only reason why Fyers is selling, the only reason why market is crashing is because across the globe, for the last several days there is sell-off. So Dow Jones starts what you're seeing, it has turned the bearish once again, and then all the gains of the last 4-5 days is all given up, and it was 1,100 points of crash. Nearly 4% of crashes happened across all the indices, and Dow Jones especially, the more than 3.6 or 7 at the close time. So Nasdaq is also showing that it has slipped. All the gains of the last many days of trying to climb back to the support zone is all gone. S&P 500 also has had a 4%, nearly 4% of crash, and everything is in bearish zones now. All the gains of an up move seems to have done, and then it seems like it is slipping further. It could slip further down from here if it not at least go back to the support zone. Then there is big trouble that may be waiting. So you have to keep a close watch of this before the trading on the previous on the next day. The entire today night's trading would close in our time tomorrow morning maybe. So we'll have to watch that and take the decisions accordingly if it is. So that'll hugely. So if there is a big fall that happens, no matter what we do well here, markets would face pressure from the FI selling. That is obvious. So if it is a small move or ordinary move, normal moves that is happening in the US markets, then it would be other things in our markets that may be influencing the up move or down move or whatever. But if the global markets are crashing, especially the mother market US is crashing, then there's no doubt that that big crash would reflect heavily in our markets. Crude is also cooled off slightly, but not much, still above the 104 kind of level. So, but it's sideways consolidating basically. Yeah, so some collapse has happened today from the crude. Well, if you see, we had seen that it had slipped down and it is still in the bearish zone, and it is trying to come back. Today is a up move for the gold. Markets have crashed and gold is seeing some green, but it's far away from getting into the bullish zone. But it may move up now that the market has crashed, and it is the globally, and now markets are moving down further, cracking. Then obviously the gold would be the hedge against inflation and would be the hedge for all kind of crashes. So there is every chance that it can climb back if you're investing this. So this could be taken as a hedge, against your long-term investments. If you don't know how to do that, there are several videos related to gold investing and also different other options, hedging strategies and all that. You can look at that in the playlist. Actionables 2 short. Dr. Lab is showing clear bearishness on this. Is the weekly chart. Entry has been made for swing on the daily or lower time frames. Even the medium term is bearish. Clear bearishness is evident. Look at the candle. Just breach the support and it can give clear swing, good push till the next support at 1263 levels. Right, put tight stop losses because market is at a crucial support zone. So you never know when the reversal happens all of a sudden. HDFC Asset Management also has breached a major support zone and is clearly going downside. The weekly charts and momentum both on the medium and the short term is clearly bearish, and it could give a clear swing trade till the 1146 kind of levels, the next support zone. Right. So two short selling of Dr. Pat Labs and HDFC Asset Management. Wrap up moderate bearishness. So bearishness has not changed since several days. Yesterday I shifted to slight bearishness because it had accounts. It was a bounce that happened, and then today also the view is clearly based on the charts and the chart study that we had done. The bearish momentum charts, bearish trend charts, the Bollinger Bands expansion, downside, support resistance level, the chart patterns, everything indicates bearish. But as I said, there is every chance that since it is at a crucial support zone, which is a previous resistance, it could happen that it can, it can bounce from here. Also, it can happen that it can be inside bar consideration that can happen, because a big 430 points one day, next day again another 430, another 200 is not likely to happen, right? So there could be a chance of consolidation, but the charts are clearly saying bearish, so the view has to be bearish, nothing else. But right, keep that in mind. No, if you are bearish, then no, the question before us is, no, where is the bottom? Are we going to make breach the previous swing low? If you are breaching, how far could it breach? What is the next support? We already seen the support resistance level. Accordingly, you'll take resistance. So overall, there is bearishness enough. There is a war in Russia Ukraine that is still going on without there is tension around that. The US inflation, globally, the inflation levels are high. Our inflation, interest rates are spiked. US Fed interest rates are spiked, and Fyers are aggressively selling. Rupee is weakening. Global Qs are negative, nothing but negative. Crude is above 100. So just all we have to do is manage your risk, cut short your position size, and take hedge positions. Know the levels. That's all you can do. Volatility is still rising. It is not below 20. It is going up at 20. So there's a lot of fear and greed and uncertainties in the market. And as long as that does not go away, none of the technical charts will work. All that works is read the levels, manage positions properly, manage your risk properly. That's all you can do, right? Positive factor is that there is strength in the market. There are people who believe in the market in spite of all the war and all the uncertainty. We're not ready to. The dips are getting bought, but if globally there is a recession that's going to happen, and the global market's entire downfall happens, then we will also, no matter what try, we can't hold. We will also just as long as you know how to trade the derivatives and options, right, and know how to hedge your long-term investments, right, and know how to have risk-defined strategies, then market falls or moves up, we can make money, right? As long as your psychology is right and your risk management is correct, right? So that's my view, right? Always go for calendar spreads and vertical spreads and hedge risk-defined strategies. And outright stop loss intraday play is difficult. Reverses can happen. VIX is above high. Stay out of the market if you're not a professional trader, and hedge your positions for long-term investment. So my view is moderate bearishness for the next day. If that helps you to frame your view for the next day, consider hitting it. And if it helped in some way, consider hitting the like button. Subscribe if you're not done it. Share it to your friends. Maximum, we have very few subscriptions. Appreciate your help in this regard. Thank you so much. Happy trading, happy learning. Thanks for watching.